Hey, what's going on, you guys? Josh back with another video for the Tech Bunch Group. Hope you guys are having a great day so far, and I'm super excited to make this video because today I want to talk about support and resistance. Now, I'm not going to talk about the boring support and resistance that we've all seen on YouTube, right? You've all seen those videos where they say, hey guys, buying your support, selling your resistance, and that's basic stuff. And what I want to do is I want to talk about the more advanced metrics to this concept, right? The more advanced side to support and resistance. And, I've watched hundreds of hours worth of DVD content from some of the best traders, right? Cameron from Foos 4, Tim Sykes, Tim Katani, Ross from Warrior Trading, Nate from Investors Underground. All these guys have incredible content that I was able to learn from. And what I've done is I've taken 4 main points, which I'll show you here, and I've kind of used these 4 points as the base for this video, right? And kind of show you guys what we're going to be talking about here. So what we're going to do is we're going to hit these 4 key points, and then we're going to show you guys some price action to kind of drive everything home. Now, the first point we're going to talk about is range, right? Whether it be $10 range on the day as opposed to $1 range. We're going to talk about prior support and resistance areas, right? Old resistance becoming new support. We're going to talk about whole and half dollar marks, right? Cycle support and resistance areas. We're also going to talk about position sizing, right? Getting yourself an appetizer. So without further ado, go ahead and pause this video real quick. Grab yourself a beer, grab yourself some chips, whatever the case might be, and go ahead and sit back, kick your feet up, and let's talk about support and resistance. So first things first, we're going to talk about range. Now, let's take a look at DCIX. We've all seen it. We all know what this stock is if you trade. The stock gone from $4 to 20 bucks in one day. Then it pulled back to 11. Market closes. The next day we open up at $16, and then we shoot all the way up to a high of $28 intraday. So massive moves both days, and this stock is on everybody's radar. Now, with that being said, this stock went from $4 to $20 on the first day. Now let's go ahead and take a step back for a second, and let's say that we're looking at a stock that's trading at 40 cents, right? Let's say this stock opens up at 40 cents and it runs from 40 cents a share to $2 a share. Now, if the stock had ran from 40 cents to $2 a share, would you be as surprised as a stock that ran from $4 to $20 a share? And the answer is probably no, right? Because a stock that ran this massive is just incredible to you, right? Because, oh my God, it ran, $4 to 20 bucks. It's insane. But a stock that ran 40 cents to $2 a share is the exact same range. It's just divided by 10. So had you seen this stock start to pick up at $4 and then next we're at $6, then $8, and we breached $10, you got to take a step back and you got to say, all right, well, this stock is starting to open up on us. So instead of focusing on nickels and dimes, right, $10, $10, $20, $10, $30, $10, $40, $10, $50, I want to focus on $11, $12, $13, $14, $15, and focus on those whole dollar and half dollar numbers. And in this case, the half dollar number would be $15. The whole dollar number would be $20, as opposed to saying, all right, well, this stock ran from 4 to 10. Well, I'm going to look for $11 to hold as resistance, because the range is so wide on this stock that you would have gotten stopped out every single time, as opposed to focusing on, if you look here, $15, right, held as the pullback on this first dip here, dropped from $15 down to 12, right? Then we ramped back up. We touched $20. That was the peak for the day. And then we dropped from $20 down to 11, almost $10 a share. So being able to scale back and look at the bigger picture and understand that this stock going from $4 to $20 in a day is the same as a stock going from 40 cents to $2 in a day is really important. Now, next thing we're going to talk about is prior resistance and support levels. Now, we all know this for the most part, but whenever you have a prior resistance area or a prior support level, when you breach that level, what you're looking for to confirm the trend is that resistance or support level holding as the new support or resistance, right? So if it was resistance, you want it to hold as support now. If it was support, you want it to start to hold as resistance, etc. So if you look here at DCIX, if I draw a line here at the prior top, we peaked out at 20 bucks on Friday. Now the market closes, the weekend comes and goes, and then on Monday we open up at $16. We shoot up from 16 up to 26, and as we come back down, where's our support, right? Well, our support's the prior highs at 20 bucks. Not only is it a whole dollar number of 20, right? Those whole and half dollar numbers, but it's also the prior high on the day before. So with that being said, as we see $20 hold as the new support, which it was prior resistance, now you have a trend that's confirming here. And if you were to understand this, if you were to notice this as it came down, you could have sized in, maybe got a $21 average, $22 average, whatever the case might be, risk a buck or $2 with the anticipation to make $4 to $5. In this case, had you got in with the $21 average, risking a dollar down to 20, you would have had $7 of upside because we ran up to $28 right after that. So you had plenty of time to get in on this because we tested this support area 3 times, right? 1, 2, and then one more time before we ripped up $7 a share. So had you noticed that, okay, well, the prior resistance at $20 from the previous day is holding as the new support. This is a good trade. This is a high odds setup. Let me go ahead and size it with 1,000 shares, risk a buck to make. In this case, you would have made 7 grand on this position with the $28,000 or $21,000 position. So perfect 2-to-1 risk reward. In this case, 7-to-1 risk reward. And that's why you want to focus on those whole and half dollar numbers acting as support and resistance, right? So that's what you want to focus on whenever it comes to old resistance becoming new support. Next thing we're going to talk about is whole and half dollar marks. Now we briefly touched on this when we were talking about range, but again, looking at this line here, $15, right? That's a half dollar mark. At $15, you pull back from 15 all the way down to a low of 12, right? You actually got a low of 11.87 here. So we peaked out just below 15. We dropped, $4 a share, just about, or $3 a share. I'm sorry. And then we came back up. But had you anticipated that, you could have got a quick $3 washout on this trade here, right? Again, we come back up $20. You could have anticipated $20 snuff. And in this case, let's say you shorted at, $19, anticipating that $20 was going to hold as resistance. You would have had $10 of downside, risking a buck, right? 10-to-1 risk reward, absolutely insane. Now, the reason that whole and half dollar marks are important is because it's psychological resistance. Everybody and their mom is looking for an area that's going to hold as resistance. And whenever you have a stock like DCIX that's opening up, the sky's the limit. I mean, honestly and truly, the sky is the limit. This stock could have ran to $100 intraday. It's very possible. We've seen stocks do it before. So whenever the stock starts to run, and it starts to rip up, you have to understand that, all right, well, I need to be focused on whole and half dollar numbers. I don't know how far it could go because this stock went way farther than anybody was anticipating. I can assure you that. But whenever it starts to come up here, maybe you're looking at $15. All right, well, I'm going to go and build in short because they rejected 15. And then when it comes back up, you got faked out. All right, well, you know what? That's fine. I lost $1 a share. I'm going to look for another opportunity to get back in. You know what? Let me do $20. In this case, you would have shorted at 20, right? And you would have made $10 a share. So you would have gotten faked out at 15, but you would have doubled up and made stupid amounts of money, 10 times your position size at $20. So being able to understand that even though the sky is the limit, and even though this stock is literally opening up and it's running and running and running, but beyond anybody's wildest dreams, there's going to be resistance somewhere. This stock's going to come down eventually. It might not be today, it might not be tomorrow, but at some point in time, this stock's going to come back down. Right? It's going to have a pullback. So when the pullback starts, people need to determine an area to start to sell at, right? So the best way to kind of think about holding half dollar marks is, let's say you're a long bias trader. Let's say you bought this stock at $10. As it's ripping up here, maybe it starts to pull back at 15. You say, you know what? I'm going to go ahead and sell. $15 is pulling back. That's a half dollar mark. I'm out. You jump out. Now let's say, you know what? That was kind of a weak pullback. We might have potential to move again here. So I'm going to go ahead and jump in again at 15, anticipating a $15 break. So you jump in again, you break past 15, you're going up. Now where are you going to sell at? Right? You don't want to just sell at the first sign of red. You want to sell somewhere where you're going to think that there's going to be some actual resistance. And what is everybody thinking about? Everybody's thinking about $20. So when we approach $20, everybody's looking for the exits because $20 is going to act as resistance. Everybody's thinking that, you know what? $20 is a good price to take profits. Nobody's going to think about, $18.55 as a good place to take profits. You know what? I just bought in at 15, and I think that $18.35 is the perfect number to put a sell order in. I mean, nobody does that, right? So everybody gravitates towards these whole and half dollar numbers because it's a psychological resistance area for them. And that's just how the market is. So whenever you see the stock opening up and having literally a blue sky breakout, you want to be focused on those whole and half dollar numbers. In this case, $20, $15, $25, $30. All right, and the last thing we're going to touch on is position sizing. So position sizing is probably one of the best things that I learned, right? And I learned this from Nate from Investors Underground. And he is, in my opinion, one of the best guys at position sizing. Also Tim Sykes from, Tim Grittani from, Tim Sykes Trading Challenge, etc. So Tim Grittani and Nate from Investors Underground are incredible with position sizing. And with that, they're able to anticipate moves based off of whole and half dollar numbers, based off of understanding range, and based off of psych resistance areas that we talked about, right? All the stuff, all the 3 points that we just hit on, they're able to use all those together in conjunction with one another to anticipate moves. And the crazy thing is that whenever they size into positions, you're not going balls to the wall, right? So let's say the stock is ripping up and, we break past 10, we break past 15. They're not taking, 10,000 shares at $19. That's ludicrous. They're not doing that. What they're doing is they're starting in with, let's say, 500 shares, 1,000, maybe 2,000 shares at 19, taking a quarter, a fifth, a sixth of their actual desired size, and they're seeing how the stock works. Because if it snuffs at $20 and it drops down to $18 a share, guess what? Now you can size in with the house's money, right? Now you can size in with extra unrealized gains that you already have because you're already up $1 a share. So it pops down to 18, pops up to 1850. You size in bigger, add an extra 3,000-4,000 shares to your position because the trend is starting to go your way, right? It goes from $20 down to 15, bounces off 15, comes up to 17.80. That's a lower high on that bounce. Now you can double up, right? Because you're already up $2 a share on this position. You can add in, comes down, another lower high, double up again, add more size, anticipating that break of $15. And when it breaks 15, that's where you start to cover in the 13s, right? So starting in small, just to get a taste for the stock, just to get an appetizer for the stock. And then when the stock confirms your trend, adding it to these bounces here. In this case, you would have got 2 bounces to add that are lower highs, confirming that the trend is holding, anticipating the break of 15, which was the prior top. And it was acting as support. It broke support, perked up, acted as resistance, right? And then now you can anticipate that washout down to $10. So that's why position sizing is super important when it comes to support and resistance. Well, that's basically it, guys. I tried to go kind of fast, so we didn't have a 50-minute video. But I hope you guys had some, some great training here. Hope you guys enjoyed this video. Hope it taught you all a lot. Hope you learned a lot. And if you have any questions, go ahead and message me on the Facebook group. We're in the TechBud Solutions Facebook group. We're doing big things over there. So if you're a trader who's interested in getting into the stock market, if you want some exposure to the market, then go ahead and join us in the TechBud Solutions Facebook group. We also have a Discord chat room with a bunch of active traders who would love to talk to you more about stocks and help you out with anything that you have a need for. So with that being said, thanks for watching. Hope you guys enjoyed this video. Best of luck tomorrow. Hope you guys make plenty of money. And I will see you guys in the next video. See ya.